These three growth ideas could have huge potential for future investments. The first company we are going to take a look at is DoorDash. This is the last mile logistics platform. They're continuing to make new partnerships with new companies. We're going to take a quick look at that today. We're also going to take a look at Beyond Meat. They recently seen a slowdown in stock price, mainly because Dunkin' Donuts kind of mentioned that they are being removed from their national menu. And the final one is going to be Tesla. This one has been very volatile, very similar to crypto in the past few weeks. So these are the three stocks, and like always, I'm going to share my overall thoughts. We're going to take a quick look at recent news, and we're also going to take a quick look at valuation metrics to see how I would feel buying these companies at these levels right now. So let's get started. The first company we're going to take a look at is DoorDash. This is currently traded as ticker DASH in the New York Stock Exchange, and as I am recording this episode, the stock is sitting at $177. Today has been such a great day for stocks. This whole week has. So it's up about 1.1%, but we can take a look from its 52-week high closing. The stock is down about 17.6%, and it currently has a market cap of $57.77 billion. For example, DoorDash on June 21st of 2021, so a few days ago, they partnered up with a grocery company to allow their customers access to on-demand grocery deliveries. The second thing, DoorDash on June 14th of 2021 announces partnership with PetSmart, offering on-demand delivery of pet essentials, right? So we can see this is no longer a last mile platform for just food delivery or restaurants. It's also for other essentials. They have also partnered up with Rite Aid on May 11th of 2021 to allow on-demand delivery of wellness and health essentials. And one of my favorite news about DoorDash right now is on June 9th of 2021, they announced their expansion into Japan. This expansion marks the first for countries in Asia and the third country outside the United States. In addition to the marketplace app of DoorDash, DoorDash is also offering their Sendai merchants access to a storefront product, an affordable online ordering system that allows customers to place takeout and delivery orders directly with the restaurant. If we take a look at their most recent earnings, which they reported May 13th of 2021 for the first quarter, they saw 198% revenue growth compared to the same time last year. They are also adjusted EBITDA profitable. This seems to be the fourth consecutive quarter of profitable adjusted EBITDA margins, and their overall revenue growth is just insane, right? Over triple-digit growth in the past 5 quarters alone. If we take a quick look at their fundamentals, right now this is a company expected to grow 20.7% on average for the next 3 to 5 years. Unfortunately, the company is not profitable, but they are positive in cash flow from operations, and I'm more of a cash flow from operations type of guy. If we take a look at their balance sheet, it looks super amazing. They have $4.5 billion in cash and no debt to their name. So this is definitely a company I wouldn't mind holding, especially during talks of high interest rates, because of these types of fundamentals, right? The positive cash flow and the strong balance sheet. So the second company we're going to take a look at is Beyond Meat. But before we get there, guys, make sure to hit the subscribe button, the thumbs up, and let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. And there should also be a link down below for my weekly newsletter. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So for those not familiar with Beyond Meat, this is the plant-based meat substitute company. You might have seen them a lot in stores. They are expanding into a lot of retail stores and into a lot of restaurants. Beyond Meat right now is traded under the NASDAQ as ticker BYND. This has been very volatile, right? We can see from its 52-week high, the stock is still down about 26.18%. And from its bottom during this overall correction, the stock is up over 40% already. So congratulations to any investor that picked up at the bottom. Right now, the market cap is about 9.08 billion. One of the reasons for in the past 5 days, the stock is down about 1%. Mainly, there has been talks that Dunkin' Donuts confirmed Beyond Meat breakfast sandwich is no longer on its national menu. And let me just say this, just because it's not on their national menu, it means it's gone completely. They are just saying that they're seeing certain states happy with the Beyond Meat product, and then there's certain states that are not. So they are keeping the Beyond Meat products in those states that are seeing great news with it. And the ones that are not are being kicked out. That makes perfect sense. Right now, I do believe there's a certain type of region and age demographics that Beyond Meat really attracts to, and I want to say it's like the younger based people. So some recent news about Beyond Meat. On June 7th of 2021, investors were super excited as Beyond Meat expands into Australia. They've also expanded in May 27th of 2021. They introduced the first ever value 6-pack of Beyond Burgers across Canada. They've partnered up with Pizza Hut in Canada. It seems Canada is really enjoying Beyond Meat right now, but we can see the overall partnerships this company is seeing. In May 12th, they expanded the products that they have in Walmart to launch Beyond Meatballs. They're continuing to launch what they call value packs to kind of just grab more customers and kind of give them a taste of their products. If we take a look at their most recent earnings, their first quarter revenue, which they presented May 6th of 2021, saw an increase of 11% compared to the same time last year. I want to say, right, this is definitely a company that has been affected pretty heavily with COVID. A lot of its revenue comes from its sales to restaurant businesses. So due to a slowdown there has been a slowdown, but I'm happy to see a pickup, a nice pickup in revenue again. It is important to know that even taking a look at adjusted EBITDA, this is a company not profitable there. Let's take a quick look at fundamentals. A huge growth again, 27% on average for the next 3 to 5 years. Unfortunately, the company is not profitable and they're not positive in cash flow from operations. So something like this, we will have to be very careful. Got to remember those risks, especially during these times of having positive cash flow, in my opinion, is such an important metric, especially as we have talks of higher interest rates in the upcoming year. If we take a quick look at their balance sheet, they have about $1.1 billion in cash and about $1.1 billion in debt. So a 1-to-1 ratio. In all honesty, I would wish their balance sheet was a little bit stronger, especially since they weren't positive in cash flow from operations. But now as restaurants are picking back up, I want to see how that changes in the upcoming quarters. The final company we are going to take a look at is Tesla. One of the coolest, I want to say to me, one of the coolest things that they announced is the Model S Plaid, right? This is one of the fastest cars out there, 1.99 seconds, 0 to 60. So it's insane. Unfortunately, it's not something I can afford anytime soon, but maybe I'll keep pumping out some YouTube videos and I'll get there eventually. Tesla right now is sitting at $683 as I am recording this episode. It's pretty much flat for the day. The market's been a little, doesn't know where to go today, but from its 52-week high, the stock is down about 22.6%, and it currently has a market cap of $657 billion. The most recent news for Tesla is Panasonic sells their entire 3.6 billion stake in Tesla. I mean, certain investors might kind of worry about this. They kind of, I mean, you want to say, hey, why is such a big player selling out a position of Tesla? But remember, Panasonic is a public company right now, and they have other important matters to deal with. So even though they sold their entire stake in Tesla, they still are working really well, right? They have partnerships in a plant in Nevada to make batteries, and they say this selling is not going to affect that joint venture. They are going to use the money to invest in future growth. So, right, Panasonic is its own company. It has to do its own things. And if it has a great investment right now that has already generated good income for them or good gains, why not sell them and focus to better off your own company? So I don't see this as a negative thing. Certain investors might, but that's just my take. Another thing, on June 23rd of 2021, a few days ago, Tesla opened up their solar charging stations in Tibet. It's the first in China. So right now, right, mainly most of us know Tesla for its vehicle revenue, but they do have a small portion coming from the solar charging stations, the solar solutions that they have. So now they've also entered in that market in China. Another thing, right, Tesla has a nice amount of Bitcoin in their balance sheet. So this has also been somewhat volatile with the overall crypto market lately. Taking a look at Tesla's fundamentals, they are expected to grow 24.1% on average for the next 3 to 5 years. The company is profitable and they are positive in cash flow from operations. If we take a look at their balance sheet, they have about $17.1 billion in cash and short-term investments and about $9.4 billion in debt. So this is actually a pretty strong balance sheet, in my opinion, I want to say, for an automotive company. I know Tesla is a little bit more than that. And I know certain investors might not like that most of their earnings right now are all thanks to overall credits that they receive. Regardless, cash flow from operations is strong for this company, and that's what I prefer to take a look at. Now let's take a quick look at technicals, and I just want to make sure these stocks are not overextended. So first, we start off with DoorDash. DoorDash does seem to be a bit overextended from its moving averages. This doesn't mean it's a bad investment. It just tells me, hey, there's a higher possibility of a pullback in the upcoming days, right? Just the risk is a little bit higher. If we take a look at Beyond Meat, it's a bit different. It's nowhere near overextended from its short-term or its medium-term moving average. So that's looking pretty good. And finally, we're going to take a look at Tesla. Tesla seems a bit overextended from its short-term and medium-term moving average. So there is a little higher risk of a pullback. Now, the final thing I want to take a look at is valuation metrics. I'm taking a look at forward price to sales ratio. If we take a look at DoorDash, it's currently sitting at 11.23. This is a bit lower than its peak, but it does seem like it's higher than its overall average. One thing though, DoorDash is really kind of expanding into new markets. That's why maybe investors are really willing to pay that extra premium for DoorDash. If we take a look at Beyond Meat, it's sitting at 10.58. This is actually cheaper than its average, in my opinion. There have been obviously better times to buy Beyond Meat, but it doesn't seem too crazy right now. If we take a look at Tesla, it is cheaper than when it's been in the past, but on average right now sitting at 9.8, it's higher than where it's been most of 2020, in my opinion. All right, so now my overall thoughts. First, a quick disclosure, I do have a position in Tesla right now. All these three companies, if they were to enter my portfolio, they would easily be a tier 2 stock. I don't see any of them being a tier 1 stock. I don't really see any of them being a super small tier 3 stock either. DoorDash really excites me for the growth that it's seeing, the expansion into new markets. Beyond Meat excites me right now in where it's at valuation wise when we took a look at valuation metrics. Tesla, I want to say just a little bit of everything, right? It's expanding into new markets, strong balance sheet. So all of them I do believe have huge potential, but we did see some of them have risk in forms of valuation metrics and technical metrics. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.